trend, babe? What do we do when we catch a trend? We ride that trend right to the end. How do we know when our risk is right, honey? How do we know when our risk is right, babe? How do we know when our risk is right? We make a lot of money and we sleep at night. What do we do when the price breaks through, honey? What do we do when the price breaks through, babe? What do we do when the price breaks through? Our stops are in, so there's nothing to do. What do we do when a drawdown comes, honey? What do we do when it gets real big, babe? What do we do when it's even bigger? We stick to the plan and pull the trigger. What do we do with the hot news flash, honey? What do we do with the hot news flash, babe? What do we do with the hot news flash? We stash that flash right in the trash.
Well, welcome to the stream, everyone. That was quite a long song, and I'm still out of town, and I have a feeling that the internet connection isn't great. So today's not going to be a long stream, but it will be an important one because we've got into, a lot of stuff moving and crypto's moving, and everyone wants to know what's going on with the stock markets. Are we at a top, or can we expect a lot more movement higher? So we're going to look at a couple of those things, and then of course energies, natural gas, WTI, and we'll talk about natural gas, and we'll talk about metals as well. So I'll just go over the main components of what we're busy with in the private group today, and we'll talk about those, but it's not going to be a long stream. And I'm hoping that you can all hear me. So please do let me know that you can hear me well, if you can, and if you can't, I'll try and switch internet. But I'm still away from home at the moment, still in the beach house here in Jeffreys Bay, and there was a bit of surf this morning, but it didn't last long, so hasn't been a great surf session so far. Let's get rid of these comments on the screen. So welcome everyone. Please do let me know if you can hear me. Yes, it's a holiday in Canada, Brian, and in the US, President's Day. So there will be shortened trading this week. So tonight, tomorrow, during the day. I think there will be some markets open in the US and some of the bond markets and so on. So it's good to see everyone here. Please do let me know. Sounds good. Fantastic. Thank you. Wonderful. Thank you. Awesome. So there we go. Okay, folks, I'm just making sure everything's working well. And while we're waiting, I'm going to start getting the stuff up on the screen here. And while you're waiting, please make sure, if you haven't done so already, there's a QR code at the top left-hand side of your screen right now. And if you'd like to join the private group at a discount, that is the QR code that you should scan with your camera on your phone right now. And scan that, get in there, and get in at a discount. It's going to be an exciting year. Now, private group's growing pretty fast, and there won't be seats available probably by the end of the month. We'll be pretty much full. We don't want to have more than about 200 or 300 people in there. So that's kind of the way it is at the moment. So if you do want to join the private group, there might be, the window might close in the next few days. So click that QR code, not click it, shine your phone camera on the QR code at the top left-hand side of the screen, somewhere just above my finger over there. All right. Use your phone camera. All right, let's get some stuff up on the screen here, and I want to, let's get up these screens. We're going to talk about the COT report for natural gas, and we'll talk about a couple of other things on here. And also, I want to go through some notes here on natural gas on the COT report and what we might expect in the coming next couple of days. And we're approaching the next contract rollover. We're about 2/3 of the way there, so we're already thinking about the next contract roll into the next the next roll. So we'll talk about all that sort of thing as well, contract roll and the COT report. Now we're going to go through the COT report, and if you're a natural gas bull, we got the COT report on Friday. We'll talk about this in some detail. If you're a natural gas bull, it's not all that good actually, and because we only got this report late, this was the 10th Friday. Was that Friday? No, that wasn't Friday, the 10th. So that's 5 days ago already, Sunday. So it's like Wednesday. So yeah, so this just came in, and it's quite an interesting report. So we'll have a look at that too. The COT report for natural gas. But in the meantime, let me just say hello to everyone. Good day, Emily Trading and Martin. And let's just get my head away from here. It's a bit too big as well. Let's try and shrink this down. Emily, nice to see you. And Ellie, always nice to see you as well. So I think it's going to be a fairly quiet session as well, folks. I see there are only 44 people here so far, being a holiday in the US tomorrow. So I guess that there'll be a few people doing other things tonight, which is great. It's always a good thing to do other things apart from looking at the markets all the time. So it's really, it's been quite a tricky week or so. All right, folks, so we've got a few minutes to go still, about 3 minutes. So as soon as the hour rolls over, I'm going to dive into the COT report on natural gas. I'm going to go into my notes, and then I'm going to go straight across the chart. So we're going to look at natural gas, oil, metals, stocks, and cryptos as well. So those are the main things that we look at today. It's not going to be a long session. Mr. Taggy, the drop in the 10-year yield. Yeah, we'll look at that actually as well. Thank you for bringing that up. I appreciate that. The 10-year yield, yeah, I don't know if it's positive actually. I think the drop in the 10-year yield may not be positive, but we'll have a look at that chart actually. I am trading TLT. We've had a long position on TLT. So, and that's moving up quite well as the yield drops. So it could be negative for stock markets actually, as people start to look at bonds and safer assets to put their money into. But we'll have a look at that chart. Quite a startling move up in TLT. Quite a lot of buying there. A lot of interest in the 20-year treasuries and bonds. Very, very interesting. So let me just get back to the chat. So it's a bit here and there everywhere today, folks, because of me being out of town, out of my office, and the internet maybe not being as good as it could be. And but I hope everyone's doing good and that you can enjoy the session. So if it is a little bit stilted and a bit weird and a bit staccato, stop and go, those are the reasons. We'll look at copper as well. Yeah, that's a good point. We must look at copper. Thank you. So bring these points up if I don't get to them during my stuff, but I will try and touch on those three things that that people have brought up as we go into those charts. So now's a good time to start as any. And I'm going to quickly go through some of these notes and the COT report, tell you what I think. COT report aimed at natural gas only. So the first thing is I'm going to just quickly scan down and see what positioning of traders have changed. This is since the 10th, so this is quite recent. The last time we looked at this, we weren't updated. This is more recent. First of all, you can see that we're slightly above the average price for this time of the year. The green line at the top there is indicating we're slightly high, which is never good for bulls. And then let's look at the commitment of traders. Commercials, big contracts here, 600,000 long, taking 20,000 off, and 440 short, only taking 16 off. So still pretty long and angling to the long side. That's the commercials. We'll talk about what this actually means when I go to my notes shortly. Then the producers, long 281, taking 13 off, and short 254, taking 4 off. So pretty balanced, but also taking some off the long side, sort of angling down to the short side, whereas commercials angling also, if anything, slightly to the short side, but still pretty long. And then managed money, this is the interesting one, 163 long, 171 short. So pretty balanced and not a lot of size there. And taking off 6.5 from the long side, but adding 1,500 to the short side. So managed money swinging short, but not dramatically so. But these are not large positions, and it's not a big delta between 6, 7, and 1, 4. But yeah, taking some off the long side, fair chunk, and putting a bit onto the short side. Non-commercials, 208 long, 380 short, so more short. And swap dealers, same sort of thing. 179 long, not the same thing, actually the opposite. 179 long, only 47 short. So the swap dealers are hedgers, and they're aiming, because they're long, they think this market might move down. And other reportables, that's people like you and me and other stuff, retail traders, 44 long and 208 short. Maybe the retail traders have got this long. Remember on the last occasion, retailers were very short, but they'd been squeezed out. And we thought that the retailers, maybe having been on the wrong side, might have dumped all those short positions, but they have not, and still pretty short, 208 compared to 44 long. So pretty interesting. And I put up some notes here with the help of ChatGPT. And I want to emphasize, I don't use ChatGPT to create the content. I use it to bulk up my shorthand notes. I don't like writing content in ChatGPT. I don't like using ChatGPT to write content for me. So I just use it to, and I've also put it into Google Docs. So you can't even see it's ChatGPT. I told you that for free. Right, so what is this telling us? So as I said, commercials still net long, but they trimmed off from the long side, but they reduced both longs and shorts. Managed, so basically pretty long, but lightening exposure on both sides actually. Managed money, long, 163, but slightly short now, angling to the short side, taking some off the long side, adding a little bit more to the short side, and therefore now angling short. Not a lot, but just edging to the short side. Last week they were flat, and now they're slightly bearish. So that's managed money. You might think that they might know what they're doing. It's not an extreme short position. We're not in capitulation mode, etc. Producers, hedging activity increasing, swap dealers, and not going to read through the rest of this waffle. But what this means is, I'll go right down to my final notes here, is that the bear flag breakdown technically means that we're bearish, if anything. Warmer weather is forecast, but we don't know if that might change. And that's been quite fluid and fluctuating. So it might change over the weekend. And we've got some more weather report models coming out shortly. And then managed money has now leaned short, having been neutral to slightly long. And that means that we are actually slightly bearish, and we need to think about it in that sense. All right, so I'm going to go to the charts with all of that in mind. Just all you've got to remember is that we're, the big money is angling, but not pumping the shorts, angling short a little bit. And I'm actually long. So who's going to be right? And we also saw the retailers, still very short, having not dumped all those short positions. All right, so that's natural gas, and that's really a summary taken from barchart.com here on the COT report. And you can go and have a look at this yourself. It's free. The COT report at barchart.com. I'm just scanning back to the notes here. Good day, Ole. Good day, Alex. Lovely to see you, mate. Welcome to a new member. It's wonderful. We will talk about copper. Just type up if the sound goes weird. If you can't hear me, let me know. Right now, okay, that's the chart. So let's go back to my notes. I'm just checking. I've only got one computer here, so it's a little bit tricky to make sure that everything's flowing smoothly because I've only got one interface. Right, so that's all of that. Now, I just want to remind you before I leave this screen that you can follow me on X here at ArcisFX on X. We're live there currently, streaming live right now on YouTube, X, and on Facebook and on Instagram. But apart from that, you can join me here at ArcisFX on X for intraday posts. And I post up a lot of stuff here during the day that doesn't make it to video. For example, a silver chart and my projection on silver, which I have not mentioned in video yet, 75 likes and 18 reposts. So really some good stuff comes out here during the day. And I also repost some other things that other people share sometimes as well, like from barchart.com. Get onto barchart.com's channel too here on X and join their newsletter. They're a fantastic channel, and they've started putting out a lot of their stuff like this on X recently. And it's really, really good because you don't have to go across to barchart.com. Look at the popularity of these. This is the sugar chart. You don't have to go across to barchart.com to sort of pick up all these moves in the markets that you might be interested in, because they post stuff up all day long. So go and join them on X and join me on X, on X at ArcisFX. And then finally, if you haven't subscribed to this channel that you're on currently, please do so now. It really supports the channel, helps us grow, and I really appreciate your support. We can't do it without your support, of course. And although I don't make any money from YouTube, not very much at all, it's not a source of income for me. It pays some of the bills for my news feeds, like Bloomberg, Wall Street Journal, CNN, did I say Bloomberg, CNBC, all of the news channels, Reuters, that I have to pay for. I use the YouTube income. And if you support me on YouTube, that makes my life a bit easier. So let's go to the charts. And I'm going to have to quickly get rid of that, leave the thing there. Let's get rid of all the typing so that that's not annoying you. And I'm going to try and put up my charts right now. I'm looking forward to the day when StreamYard improves their software a little bit. Right, so we've got the charts up here, remembering that if you scan the QR code at the top left of the screen, you can join our private group at a discount today. And we're also going to be potentially closing the private group to new members fairly soon as we get fuller and fuller. So make sure you go and point your phone at that and scan it if you want to. All right, let's look at the charts. And I'm going to start, as I said, let's start with natural gas for a change today. As I said, I'm long on natural gas, a tiny position. Now, we've been long, remember what the COT report said, markets generally angling to the short side, if at all, not dramatically, but somewhat. We've also made comment on the fact that we've now got this bear flag that we broke down with a gap. We're trading at the lower part of the range now in this big order block at around about the $3 level or just above. We've also on this chart got two rollover gaps, two weekend gaps and a rollover gap. So that's a weekend gap in the middle of your screen over here. That's a weekend gap over there, a massive one. And then we've also got a contract roll gap to the left-hand side. I've got a red arrow over here pointing to this black line and this zone here, which we gapped through on a previous occasion over there. Just going to quickly check that you can see everything perfectly. You can. Okay, that's lovely. Going back to the chart. All right, so we gapped down through that black line. There's obviously an important level at some point over there. And I've had it in. It's also part of the market structure break and order block, bottom of the order block. It's also a fib retracement level. And it's a pretty important level. Notice how we gapped down through it, and we've been trading in and around there. And then, we fell down through that exact same level when we broke out of the bear flag with another gap. So we've got a gap, and a roll gap, contract roll gap, and this important level above us, which has obviously held us down. You can see all the traffic in that red zone that prevented us from breaking through. So we've now dropped down, leaving those gaps behind. They've got to be filled up. And what we did last week was I bought all of these dips, every one of them, and we tried to bounce out. Now we did bounce out and around about the $3 level, and we got up to the 50-period moving average here on the 4-hour chart and fell back down again, and I got out of the trade at break even. I could have taken some profit on there, actually, around about $3.10 or 9. We got all the way up to $3.30. Could have taken a 20-cent trade on there. But anyway, I'll get out of that at break even. And then when we came back down to this level and formed a reversal candle, actually a couple of reversal candles now. First of all, a big bearish candle. That's where we got out of the trade, out of the hedge position at break even. So no gain, no loss after we had a 20-cent profit on a big size position. Actually, I had one of my largest positions built up from here, and we could have taken profit. It collapsed down so quickly. So we got out of that trade for no gain, no loss. I bought again at the bottom here after this sort of tweezer bottom with a piercing candle reversal. Didn't quite make a new low, but it made an equal low to the previous candle. Not quite perfectly. If anything, it's slightly higher. So it's an inside candle, which is a hesitation or a wait and see, a pause candle. But it does look a bit more like a piercing pattern, closing more than halfway up the previous bearish candle. The very next candle made a new low, that's this candle here, and closed very strongly and very bullish. We're long from that green arrow at about $3, I think, $3.13. I think it might be slightly incorrectly placed. But, and we're currently trading, we closed on Friday at $3, 318, call it 319. So we've got about 5 or 6 cents profit in this trade, but it's a very small position, and it's not nearly as big as what I had on from down here. It's just a tiny 10% position. And then what happened on Friday, the last candle on Friday, we collapsed back down after failing the 50-period moving average again on the 4-hour chart, not getting up into the gap. We haven't closed that gap. We got halfway into it. This little rally didn't even get up to the previous high, but we got to the 50-period, and we're sort of holding above this point of control now with a long position with about 10 cents profit. A very small position, not adequate in size at all, not sufficient. So I don't know what's going to happen. Now, as we saw from the COT report, and we could look at natural gas weather. I'm going to quickly look at that. You won't be able to see it on screen, but I'm going to be waiting for updates later on as well. So I'm just going to read out the headlines from Nat Gas Weather. This is it. So just listen, you won't be able to see it. This week's Nat Gas demand for February the 12th to the 18th. Today's the 15th, so this goes through to Wednesday. Chilly weather systems will sweep across the Great Lakes and Northeast through the weekend. That's this weekend, with highs of, I think, unless it's next weekend, I'm not sure. It looks like it's already sweeping through when I'm looking at the weather map, talking about this, and people are saying it's cold in parts of the US, with highs of 20s and 30s, and then warming into the 40s and 60s next week. I'm assuming that's this coming week, starting tonight. And the rest of the US will be mild, with highs of 40s to 70s, whilst unsettled over the west. Rain and mountain snow. Cold air will push into the west mid to late next week, and overall demand will be low for the next 7 days. So low demand, patchy weather, bit of cold weather here and there, but generally lowish demand. We're at the bottom of a range near the $3 support level, and there is potential for us to move down to the next support level, which might be as a factor of weather. Now, of course, we're going to either gap up, gap down, or gap nowhere in a few hours' time when this market opens up, and we'll have to decide then. But looking down below us to the left-hand side here, we've got a little gap still that has not been completely filled, and the bottom, let's just zoom right in. The bottom of that gap is at $3.01, and I'm wondering if we actually did get there on that last dip down. I don't think we did. I think we got to 3.0. Oh, we did. We got down to it right over there. So that gap is closed. We've got an order block down here. This is the bear flag, the skinny channel that we fell out of, but it's basically been completed already. There's the, maybe not, depends on where you take the flagpole. If you take the flagpole from the top into the bear flag, then we have to assume that the measurement for the next move will be equal to the to the flagpole, which is all basically 443 down to 324. So $1.20 from there, let's just have a quick look, would take us down to about $2.40 if we followed that flagpole. If we consider that bear flag, well, that bear candle there, this one where we got short, to be the flagpole, then we're probably at the bottom of the completed flag pattern already. Let's look a little further down, and as I keep on saying, and as I've said often, we could get down below $3. On a whim, we could get down to the bottom of this range, and that's at about 273, 272. Let's put a black line in there. Let's duplicate this line. So, and I said this in the videos last week, that with, if there's enough bearish momentum, we could get all the way down to 272, and then we've got these three zones or previous swing lows that we could reach. Let's put a little blob on each one of them and see which one will attract the price, if any. And I'll make them all green as support blobs, if you wish. So there are three blobs here, and they're all up for grabs, right? They're all valid targets if we move down into that green order block and down below it. So we're talking 272, we're talking 278, and we're talking about 290, these three blobs. And we're trading just around about, just above $3 right now, 315. So let's go back to the 4-hour chart and see where we're likely to move. Remembering I'm long now, all of these positions were stopped out of break even. The only one I have now is this little long from down here. After that, what I think was something similar to a piercing pattern, followed by a spike low, followed by a big bullish candle, followed by an inside bearish candle, and stuck between the 50 and the 20-period moving averages, like natural gas often does. Look at it over here to the left, stuck between the 50 and the 20. Look at it over here, stuck between the 50 and the 20. Very often, this is what natural gas does. The red and the green, right? The 50 and the 20 stuck between them over there. And, many, many times. And when it does get stuck there, it can take, a little time to get out. So that's where we are. If we gap down, and considering I only have a very tiny position on here, if we gap down, I will consider exiting that position entirely, just taking the stop loss, or I might hedge it and try and ride this down to as low as we can get with the short position on, down to 290, 280, or 270, one of those roughly 3 levels. And there, at that point, I'll take profit on the shorts, which we haven't put on yet, the hedge, which I'm going to put on if we have to, and then start to look to get long to buy this up. My general idea is that natural gas will be trading above $3 most of the time, but below $5 most of the time, maybe $5.50. So between $3 and $5 most of the time, allowing for spikes beyond there to 280, 270, 290, or above there to 550 or so, maybe even higher. So that's my general idea on natural gas, and that's formed by chart patterns, but also by demand for natural gas generally just growing, demand for electricity growing. And natural gas has been pretty useful for many of these AI farms and Bitcoin and other farms that use a lot of electricity, and natural gas being super useful. So that's my idea on natural gas, folks. I don't know if it's going to move up or down, but the weather reports and the COT report and the positioning of traders seem to indicate that we may need to probe below this order block, below $3. We may have to look at 290, 280, or 270, roughly. I gave you the precise numbers. At that point, I will be hedging and trying to take profit on the shorts at 280, 290, 270, and then start to look to buy, as I believe that natural gas is generally in a more positive sort of environment than it has been the last couple of years. Now, while we're on energies, and I said I'd be short in this live stream, but it's not so short already, it's taking way too long. But here's, so that's natural gas. So if you've got further questions on that, please type them up and I'll try and get back to them. And WTI, everyone keeps on asking me, is this going up or is it going down? And my standard response is that if we don't hold here, which looks like we might actually, I'm short from the very top. Also got a few other small short tranches down further below us, but I'm short from right at the top here. Now, I think, as I keep on saying, WTI is generally moving down in a descending, in a falling channel, which is going to become more and more difficult for us to move down. And this little tick up in the last few days has been quite a little sweep up, hasn't it? A little epsilon tick, a little Nike tick, quite a strong one. But we have rejected here at this order block so far. I'm allowing for a move back up to the channel top and the next order block and a rejection from there. And also, we've got further points of resistance even higher at about $75. This is around 69 to 70. We could get there. And I thought we might do that this week or last week, but we didn't. And we actually slumped down rather than moving up and probing higher. So this is interesting. Each one of these spikes is as a result of geopolitical tensions, wars, supply side shocks, whatever. Even tariffs got involved in oil, believe it or not. But every time it's been, shoved back down, and we've made lower highs every time. This won't go on forever. And we have this big double bottom down here at about $55, which still has not been defeated. I think it might be tested and actually broken at some point down to 50, 48, maybe even into the mid 40s. But the longer we fall down in this falling channel, the more difficult it is to be able to keep moving down. And of course, as the price drops, like every other commodity, it becomes more attractive to buyers because it gets cheaper. And so people will be looking to, load up countries and companies and industry, loading up on energy at current prices. So I think generally oil is going to move down, and I'm still short, and I'm going to hold this to try, see if we can get back down to $55. And then if we can break through there, I think we'll surge, rush down to 50, and then just below 50, maybe 48, and then probably bounce out of there. So that's oil and gas. Now on metals, I put this up on X, and I'm going to leave my thoughts exactly as I put them up on X. I don't know what's most likely to happen next. There's a lot of talk about silver physical versus paper silver, demand, industry demand, central banks buying silver, silver going into weaponry, into electronics, into conductive materials, silver used in industry in general for all sorts of other reasons. But also we've had this massive move up, exponential move up to $125, breaking out of the $50 range. I think we're probably going to have to come all the way back down. I'm not the only one who thinks this. I may be the first one who said it, but I'm not the only one who now thinks this, because after that big drop down, we did try and buy a little bit. We got hedged. We actually got hedged at the top as well. We took profit on the shorts right down at the bottom, but I'm stuck with this long hedge at the top here. So I've got a long position here at around about 100 and a short position at around about, I think that's 84, 85. So $15 gap. It's massive. Not a large position, but a large gap. So it's not good. And I think that, you know, we could get back down to the breakout level, back down to the 200 period moving average here on the day chart, and we could get the RSI back into an oversold condition. The RSI has not been oversold literally since April 2025. And it's not often oversold, you know, very, very seldom. But we haven't been oversold since then. And I think there's a good chance for us to just reset this RSI, come back down to the 200 period moving average, and start building a very strong floor for the next phase of silver, which I suppose now is no longer the $20 to $50 range, which we've been in for so long. Let's go back and have a look. Let's get rid of all that stuff. There's the $20 to $50 range that we were in for ever in a day, all along here. And we're now right up here in a completely different range. And I think the dollar, I think the range is now $50 to $100. All right. So we were 0 to 50, roughly, not 0, but, you know, low to 50. And I think we're now 50 to 100. Markets often work in halves. When we get halfway back on most moves, it's a good place to consider buying. You know, if we've rallied, we pull back halfway, like we did on, for example, Bitcoin. Bitcoin rallied to 120,000, came back halfway to 60 and bounced. And silver could come back halfway. It's not quite halfway, $55. Actually, 55 is pretty close to half. And in fact, we've got the 786 fib, which we did tag already, which may need to be retested, and it could still hold. And that is exactly halfway at $60. We went all the way up to 120, came back to 60. Maybe it's done. I don't know. But I'm allowing for this to happen, and I'm not going to unhedge. And I think we could get this RSI oversold and then form a base at around 50 to 55 to set silver up for a multi-decade new higher range. Some people think this could go back down to, you know, 30, 40, 20s even. I think that's a bit extreme. I don't think it's going to go that low, but, you know, it could. But I think 55 is pretty safe. Now, if it doesn't keep moving down, and notice what happened on Friday. It's pretty interesting. There's the silver Friday candle. And if I go and have a look at this on the 1 hour chart, you can see we made a bit of a move up. Let's look at the 15. This is Friday's movement. Made a bit of a move up on silver, and then just started rolling over and started making lower highs here on the 15-minute chart. And if we look at the same thing on gold, though, gold looked a lot better on Friday, and I'll do exactly the same thing. There's gold's Friday candle with a shaven head, so very, very bullish. And if I look at this one on the 15-minute chart, rather than rolling over, gold's actually moving higher and keeping the bid on. So I think gold looks good and silver less so. And a while back, if you remember, we were basically a little bit negative on gold, but much more optimistic about silver. And we were trading that gold-silver ratio in the favor of silver. I think maybe now it's switched around, and the gold-silver ratio has now become, you know, stretched to its extreme, and it needs to snap back a bit. And I think gold will actually do better than silver for a while. And so I'm going to consider, I don't have a position on gold, and I've got a hedge position on silver, and I've got a position on copper, nothing on platinum. But I have no position on gold, and I'm looking to get long on gold. I'm remaining hedged on silver until we see what that, you know, how that plays out, how this unfolds. But this is gold, and I think gold might actually do okay after spiking down to the 50-period moving average, the channel bottom, and holding up pretty well. Now, I don't think they're going to move in opposite directions. So if gold moves up, silver will move up at different rates, of course. But if silver moves down, gold will move down. And the previous candle on gold, Thursday's candle, was pretty negative. All we've done, and I'm going to show you this, all we've done is we've retraced, I think, 78.6% of the move down, and we just come back to there. Actually, not quite, almost 78.6. Let's make this a bit skinnier. Almost 78.6. Well, we got to 618. We could get to the 786 and then roll over on gold and follow silver down. So just reminding you, this day chart move on gold on Thursday wasn't good. We had this big bearish candle, and we've retraced almost 78.6% on Friday, but we have not made a new high, and we're still kind of rolling over, not as bad as silver. But this is not bullish yet. We have not tested the 786. Let's go back to the 4-hour chart just to remind you, or we could do it on the 1-hour chart. We have not tested the 786. There it is on gold. And when we do, it might just collapse right back down again, like that big candle that forced it down in the first place on this last little move down over here. So super interesting. I don't know which way these are going to move. I don't have position on gold. I don't have a position on silver, apart from my hedge position, which I'll look to unwind as I can. Let's get rid of this messy stuff here. And so, yeah, but I would like to get long on gold. But I think silver might drag it down. I don't know. I'm going to be very cautious. We've taken loads of profit on gold and silver over the last year or so, and I'm not willing to mess it all up and throw it away over some FOMO FUD weird moves. Now, this is copper. Copper, people think, is going to do pretty well. And I also think so for the same reason that silver will do well, used in electronics, electricity, industry, building, everything basically, and weaponry. And so there's a lot of demand for copper, and it's still pretty cheap at $6. And we've moved up a lot. We've broken above that previous high. We had the tariff sell-off that shoved it all the way back down to the bottom. We got long at the bottom here. We tried to get short there, hedged, took profits on the long side of the hedge, something like that. And then I think, oh no, we got out of the short, took profit on the longs here, and then we were out of this market. This is the day chart. We were out of this market for a long time. We spiked up through that high. This is copper. Big collapse back down. We then bounced off of 50, made another massive rally, and 2 days later, or the next 2 days, we moved down. We've moved down again, holding the 50, but not strong. Now, the RSI is still near the top. I think maybe this needs to come back down a bit. I'm very positive on copper, and maybe, just maybe, we've got to come back down to like $5.30, back down to that fib level. Let's just redraw this fib and make it more accurate. Just going to draw it up to the top there. So something like that. Actually, let's get rid of this fib and draw one from the bottom to the top, like that. And I think we could come back down to like the 50% retracement or the 618, somewhere into this region. But, you never know. It might just bounce out of here. And if it does, because I've only got a small size on here, I'll try and add some more size to my copper position. So in summary, I'm long on copper. It's the only one that I've got a naked position on. I've got nothing on gold. I'd like to get long on gold, depending on what silver does and gold together, how they move in general. And I'm hedged on silver with a long and a short. And I think that silver has a chance of getting back down to 50 or 55 bucks, but I'm not sure. Some people think that's the case. Other people think that's as low as we're going to go, down to, the 786 fib at the 100-period moving average, spike low, bounced off beautifully, and maybe we won't get the red arrow down to retest the breakout level. We have not retested this breakout level yet. It's a clear double top breakout, a beautiful one, and the market has not yet come back to retest that level after taking off. So it wouldn't be a bad idea for us to just come back there and retest it. So that's that. Yeah, so Monday's a holiday in the US. Yes, that's right. Markets are closed. Not everything's closed, TDC. You're short on copper. Actually, you might be in the right direction, Kiran. You might be in the right direction. Kiran, whenever I look at your name, it looks like KL Rank. I think it's my eyesight that's bad. But I have to remind myself it's actually Kiran from the private group. So it's good to chat. For drawing fib extensions, are you using a 2-point system rather than a 3-point? Yeah, there are different ways to do it, but I'll come back. If we have a chance, we'll talk about those fib extensions in a little bit of time. Right, now, next thing I want to look at on these charts is, let's look at crypto while we're here. I'm a little worried about the price action on the last move on this is the day chart. This is Friday. This is today's candle. Let's look at this on the 1 hour chart quickly. Bitcoin, I'm not committing to one direction or the other just yet. This is Friday. Sorry, this is today. So big move down. This is a few hours ago. These are the last 4 or 5 hours, holding the 200 period moving average on the on the 1 hour chart, but with a falling triangle or falling wedge, and that might just break down. So it's not looking strong. We had a good attempt to run up through those resistance levels over the weekend, but we didn't even get to the top of the yellow block. And this is my zone. Only when we get out of this zone will I start to look at different positions and long positions mainly. I'm long on Bitcoin. I'm a Bitcoiner, as you all have seen from the display behind me on the chat here. But all of that is unleveraged and in storage. So I'm not trading on leverage at the moment. I have a couple of very small, very tiny long positions on Bitcoin from within this zone, but I'm not convinced at all. And particularly the price movement in the last couple of hours hasn't been great at all. So let's look at this on the weekly chart one more time. And you can see the overall theory here is this. We've come down to the 200 period moving average. We've performed an oversold RSI on the weekly chart, and that has not happened since 2022. And I want to point out a couple of things. In 2022, when we came down to an oversold condition on the RSI, over there, we had to go lower still before this was resolved. So if we zoom into that, you can see we came down, we got oversold on the RSI, bounced out a little bit. It's very much like we're doing right now, actually. If we look at the price action today, it doesn't look very dissimilar to this. And this is a weekly chart. So this took 1, 2, 3, 4, 5, 2 months. And then we made a new low, another new low after bouncing out and with the RSI still right down at the bottom. And then we bounced out and eventually got going. And it took so long. It took us all the way from June 2022 until January 2023 before we actually got this impulse bounce out of this zone. So 6-7 months we stayed, and look at the RSI. It remained down in that oversold or very close to the oversold condition throughout that entire period. Look at where we are now, and a very similar situation, right? We bounced out a little bit on the weekly chart. We've only had 1 week of bounce. This was 6 months it took to get going. We've only just arrived here. And if you add 6 months onto where we are currently in terms of time, that takes us to July, August this year. And we might still be down at $60,000. We might even have to get lower. We might have to get all the way back down to the low here at about 48,000. That's this big spike low, which drove everyone nuts when it occurred. I don't know if you remember this, but we had this beautiful range. The range bottom got taken out, liquidated. Excuse me, I need some Red Bull. And then the market got going. And that upset a lot of people, liquidated a lot of people, that move. I remember it very clearly. It looks very small, but it was a massive liquidation. So scooting across to today, and remembering this is the weekly chart to this week, that's where we are. RSI is oversold. It's the first week that we've been down here, or second week really. And look how long it could take to bounce up if we compare this to 2022. And also, we might get another leg down like we did in 2022. That could take us down to 48,000, this low, or even we might sweep that low down to, let's say, 40,000 into this little gap here in the order volume. So yeah, I don't know. But if we can close above this yellow zone right here and start to build constructively on top of this zone, then I think we got a chance. And if we look at the, building something, and maybe 60,000 was the bottom, I don't know. But when we look at the Bitcoin futures chart, BTC1 exclamation, you can see that some similar sort of pattern. But we've got the CME gap where I've got the green block and that swing low over there, spike low, CME gap, and the 20 period moving average and the 50 curling down as well. I think we're going to have to retest that fairly soon. And we've also got another little CME gap above us because the market has moved down. This is not open yet. This is the futures. They only open in a few hours' time. So yeah, I mean, this could move either way. So I don't know. I don't like the price action in this last part of Sunday. Bitcoin moving down. You look at all of these on the 1 hour chart, you can see they've all moved down quite dramatically in the last few hours, and I just don't like the way it looks. So let's see what happens when we open up and if we can bounce out of this level. But they're all looking very, very droopy to me and not good. Now, final thing I want to talk about, or we'll talk about stocks as well, but we'll talk about the dollar. Final thing I want to talk about is stocks. Are we moving up or are we moving down? And I don't know. There's so many different opinions on this. I've got a target down here in this big blob, which is about 20% down from the highs. Let's just measure that. And because of the way this is trading, let's just check about 20%. Yeah, 17 to 20%, 18, 19, 20% down there. Down into the support level, into this region, into the 50% retracement of this big move up. And it's looking very toppish. We've got a double top here with the two red blobs. We've broken down through these triangles, the downward sloping triangle and the upward sloping part of the triangle. We tried to get through that blob and the moving averages a few days ago. We failed there and we're moving back down. Now, I'm long from that green arrow, and I actually hedged when we started moving down on Thursday, and Friday I unhedged thinking we have a chance here. Until we break down through really this black line, I'm going to consider that we're still in a bullish move and still in a bullish market, and that this is actually, I've got triangles drawn in here, but if you look at this between the two horizontal lines, you could consider this to be a bull flag, right? There's the move up. The flag is the horizontal bit here, ignoring, actually, I'm tempted to delete these triangular lines, angled lines, but I think I'm going to leave them in. But a bull flag between the horizontals, there's the top where the double top is, and the bottom here where the triple bottom is actually now. So if it is a bull flag, it's got potential to move much higher and break out through the top. However, within that bull flag, there's this weakness showing within these triangles, triangular structure, and the fact that we rejected the moving average cluster and the triangle apex over here lends more weakness. I'm going to give it another chance. I've only got 10% on NASDAQ and I've got 10% on S&P. S&P, I saw the word triple top somewhere on YouTube or X. So I quickly drew in what they think is a triple top. I'm not too sure. I don't think it's, I don't know. Very similar to NASDAQ, except that we don't have such a clear sort of block or bull flag, and we've been gradually, progressively making slightly higher highs as we moved along, except for this last high, which was slightly lower than the previous one. I'd say they're all at about the same level, and they're all pretty close to each other. I don't think it's really a triple top. Yes, it's a triple top, but not much of one. And like the NASDAQ, I think if we can hold these levels down here and these Fibonacci support levels, we've got a chance of bouncing out. Now, I did not hedge this one on Thursday or Friday. I've got a long position from over there, which I entered after this big, massive piercing pattern reversal candle. This is classic. It's a bullish engulfing piercing reversal candle pattern. Made a new low, closed more than halfway up the body of the previous bearish candle, made a new high, closed above the high of the previous candle, and engulfed the entire candle completely. That's the dominant candle on this page at the moment. All of these candles are still within that larger move. And so until that bottom is broken or defeated, and we can put a precise number on that level now, because that's the candle that we're playing off. That's the important candle. So let's put a horizontal line there, and I'll leave it purple. And that number is 6729. And that, I think, and it lines up nicely actually on the left-hand side here with these highs and lows and so on as well. So I think that's my line in the sand. If we close below that purple line, I'll probably flip to short and then assume that we'll get a 20% correction on the NASDAQ and on the S&P and position myself in that direction and then looking to take profit on the shorts and swing out of there after about a 15-20% correction. If we get a 25% correction, we may be entering a bear market. And of course, we don't want to consider that just yet at this stage. So that's it. I've got names. I've got I'm long on the German 32. The German 30's got a little gap above it, and it's done really well, and it's holding this breakout support level. I was wanting to buy this breakout forever and a day. We bought the dips, but we didn't manage to buy the breakout until quite recently. And I've been watching this for about half a year, maybe longer, maybe a year. We got one attempt, two, multiple attempts here. one attempt there, another one there, another one there, and eventually we broke through. Didn't quite get to the upper Bollinger Band, but we came back, gapped back down a little bit, back to the breakout area, held it really well, held the 50, held the 100 period, and constructively moved through and held the 20 period moving average here on the day chart. And we actually closed the gap as well on Thursday with that spike into the gap. So hopefully that's not the close of the gap and we're now moving down, it's not kissed it goodbye. Hopefully we'll move up through it and carry on moving higher. But it is closed now and we can ignore the gap. But I think that looks quite good. I love the way this is broken out at a multiple flat top breakout, massive breakout, first retracement, second retracement, third retracement, and bounced out and we got long. That's the German 30. And I've got longs on quite a lot of these names. MSTR and Coinbase, the ones that we were most worried about a few weeks ago, are looking fantastic. MSTR might well be actually front running or foreshadowing what might happen with Bitcoin, and it often does do that. I think there's plenty of space for this to move up. And despite earnings and despite the price of Bitcoin falling down below the average price of MSTR's purchase, MSTR did really well after earnings, bouncing up with a massive post-earnings rally. So I like that very much. And then finally, I've got a number of these names I'm interested in as well. Meta, Avgo, Palantir, Microsoft, TSM. I really want to get long on this one. And we look at that big move, that massive spike down. Didn't get a chance to get long on here. I was looking for a move back down just a little bit lower, down to the 100 period moving average. We didn't get it. We got quite close, but there just wasn't time to get into that trade. Maybe we'll get another chance. It's a bit of a hanging man, actually, inverse hammer, hanging man candle pattern. So maybe that's negative, and we have to move back down to the bottom of that spike. And then dollar, as I said, I'll be talking about the dollar. And this one here, I think now that we've weakened this lower purple line, I think the dollar is going to keep moving down. And so we've been short on the dollar and continue to be short on the dollar, looking for this to move down through that low after having weakened it with that triple bottom attempt. Each low has been lower than the previous one, interestingly. That was slightly above the purple line. That one touched the purple line. This one went through it. So angling down and weakening the line with a forceful move through it, getting to an oversold RSI, which it had to bounce out of just to balance everything up again. But now we've got the opportunity for this to move down. A weaker dollar will generally help risk assets. And someone brought up earlier what's going on with the with TLT and the 10-year yield. Well, let's look at TLT. Massive rally up. We're long on TLT from the breakout and the gap up through the 20, 50, and 200 period moving averages. We've got long at the bottom, at the opening of that candle, and we're still long. Yeah. Why have I got comment written there? I don't know. So long on TLT, massive move up. And what does, although I'm happy that we're long on TLT and we're in profit, and the 10-year yield moving down quite dramatically, what does worry me, there's the tariff whipsaw. What does worry me, and I thought we would be moving down, we are starting to move down now, is that if we see the 20-year treasuries, TLT, moving up so dramatically with a real bid under here, it means that there might be some difficult times ahead for the equities markets as people move out, de-risk, and move into. Now, are we de-risking or are we going risk on? I don't know that either. Depends on what you read and where you look and what data you look at too. A lot of good arguments for we are going into a risk on environment or we're going into a risk off environment. I tend to be in the school of thought that 2026 is going to be a really good year. And we're going to extend the pain, so to speak, that we're going to see continued asset growth, continued devaluation of currencies overall, not the dollar against the other currencies, but just currencies. And so your money, whatever money you've got, including Bitcoin, the way it seems at the moment, I hope not, but I'm talking about fiat currencies, your money is able to buy you less Bitcoin, not so much Bitcoin, let's keep on saying, but your money is able to buy you less gold, less silver, less property, less stocks, less uranium, less oil, and so on and so on. So your currency is devaluing, and I think that theme is going to carry on, and we'll see risk assets continue to appreciate into 2026, but only until we hit the wall, until something bad has to happen. We can talk more about that as we go along. But that's it, folks. I think that's generally my thoughts. And I'm going to remain long on assets for now. And that includes NASDAQ, S&P, German 30, and some stock names. I'm going to remain long cautiously on Bitcoin, not looking to do much right now, apart from having these very small positions that I've got on. I'm long on Bitcoin, Ethereum, and XRP. These are all tiny positions. I've got larger positions much higher up that are hedged completely, closer to 90,000. So I've got Bitcoin longs around about 90 to 91,000, quite a lot of them, but they're all hedged at about 89. So I've got those shorts on and I've got the longs on, but I'm now trying to build a smaller position down in this order block here on Bitcoin. And the moment that we get out of this yellow zone, either to the top or to the bottom, I'll decide what to do. I'm hoping that obviously we'll break out through the top because I believe in Bitcoin. But we've been stuck in this range now after that big sell-off for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. So almost 2 weeks we've been stuck in the yellow block. I don't know what's going to happen next. Some people think we're going down to 40. Some people think we're going up to 90 in this coming week. I don't know. All right, folks. And I think I've covered almost everything. There might be some things that I've omitted, but I'm going to try and finish today a little early rather than an hour and a half. Thank you, Rich. Good today. Thanks, mate. Appreciate that. Well, it's because I'm in Jeffreys Bay and the surf's up. That's why I'm looking good. I'll be up at dawn tomorrow to go and check out the surf. Cocoa. All right, let's have a look at cocoa. Cacao. All right, so do I have my cocoa chart up here? I don't have my cocoa chart. Let's put it up. Where shall I put it? Why is it not up here? Hang on, I can get it up. Bear with me for 1 second. I'll just bring up the commodities. There we go. Of course, it's going to take ages to load now because the internet's a little slow. And actually, TradingView is quite resource heavy. So there we go. It's come up. All right, cocoa. So the reason I didn't really bring this up because there's not much to say about my positions. I'm long and short from more or less the same price over here. And I wanted to get long to try and ride this up. Just let me just quickly fix these. I wanted to get long to try and ride this up in order to sell it, but it didn't go up. It went down instead. So I immediately hedged the long position. I bought there looking for a potential move up into this gap, a Cocoa Moab. That's the big breakdown level that we have not retested yet. And we gapped down through it. And so I think that gap probably needs to be revisited. And not only because it's a gap, because it's also a breakout level. So I think we've got to come back there. And we've come down a long way. But so I thought maybe we could bounce out of here. And we did try. We got a tweezer reversal candle pattern with a bullish engulfing candle. It started to move up, gapped up a little bit actually, then collapsed back down where I hedged immediately. The moment we didn't get going, I didn't like the look of it because we had that beautiful tweezer bottom. We should have kept that momentum going and launched out of there using that as the base. Lots of reversal candles here. But rather than doing that, we collapsed back down just below the line. I hedged it and that's it. And it's now moving down. So I suppose now we've got to abandon the long side of this idea and assume that it's going to keep on moving down. It's such a very messy chart. Let's put this onto a log scale and see if we can put some Fibonacci's on here and see if there's anything at all that might give us a clue. Probably not. So it's such a vast move up. Let's go right from the very bottom all the way to the very top. Let's see if we've got anything of interest. So the 618 fib, where are we? Right down here now. We've gone through all all the Fibonacci levels. We're down through the 786, which is more or less where we try to reverse this to get a bit of a bounce. And we're moving down into the more established range that Cocoa likes to trade in, reaching the top of that range. So we've got to start looking for highs now. If you're short or good, I think I'd remain short. But start looking for areas where this might reverse. And if I zoom in, there's a little wiggle there, a little zone there that you might find some support or resistance. That's at around 3,700. And then, of course, we need to look at the highs of these previous rallies. There's a double top there. That's a very good one, actually. let's bring this down and whoops. I didn't mean to do that. I meant to, let's put a line there. Double top there. This one I kind of like, horizontal line. So that level there would be a good place to consider a bounce out of there. And there's also consolidations there on cocoa. So that might be a target actually. And we're not too far from there now. Currently trading at 3,600. This is just below 3,000. Just below 3,000 sounds about the right sort of target for me, about 29.50. But I was hoping that we could get up higher to sell into this rally. This is the weekly chart. And of course, we moved down. Maybe we'll get a bounce back up there this coming week. And if we do, back up to the purple line, and a reversal candle at that point might give us the chance to short this. And if we look at this on the day chart, we haven't retested the breakdown level yet. All right, so we've broken down, we've not retested it. So we might see something like that, and it might be the chance to get short. So I'll probably unhedge if I see this moving up. This is a day chart. I'll be looking at it on a 4-hour chart or something like that, and looking to unhedge the long side of this little tiny hedge and add to the short side and wait for this to move down. That's the kind of idea. But you never know. We've still got that Moab gap in that sort of beige zone above us that might need to be retested. So that's cocoa. No real trades, that tiny little hedge. And whilst we're on this page, yeah, that's about it really. I think we're mostly out of all of our softs and grains at the moment. I've moved a lot of this into just taking some of them we took profit on, some of them a tiny loss, not much. I think overall a bit of a profit, but I've just basically taken that capital because I want to allocate that into some of the cryptos, depending on how the cryptos perform and behave over the coming days and weeks. But I want to be ready with some capital to allocate to crypto if it looks good. All right, so that's cocoa. All right. URA. All right, let's look at URA. Yeah, sure. Sean, always a pleasure to look at URA. So yeah, so I'm just long on URA. Basically, I think this is looking good for a bounce right out of here. Actually, we've come back a bit, not much. Good, decent. If you get anything with a sort of a 20%, not that, with about a 15 to a 20% pullback is always healthy for any instrument. We pulled back about 20% here on URA from that high down to this order block. We bounced out of there quite nicely, rejected from the 20 period right here. There's my projection. That's what I thought might happen. And let's move that along a little bit, just to here. All right, so it's the same arrow, which I had there. I'm just going to move it along to here. And that's where we are currently trading. And that's still my idea and my plan. I'm long from quite a lot lower down, and we've been long this entire time since about $20. We're currently trading at, where are we? $51 now. So that's where we initially got long on this last move. So yeah, I think it looks quite good. Allow for a dip back down to the order block. We're almost there now, near as damn it. We are bouncing off the 50 and the 100 period moving averages. That's these two moving averages here. And, it's a breakout level. It looks good. I like it. It's a market structure breakout level too. And I think if we could either from here or a little bit of a bounce down to there, and do allow this to go a little deeper just to scare out a few people, of course, and always allow for the scary bits, and an approach to the 200 period moving average over here. And the 200, of course, is your good long-term support line. So something like that or like that, anywhere into this order block or near the bottom of the order block. Let's leave it like that for the moment. Make us so we can look at it with a slightly more conservative angle. All right. Hello, Cricket. Cricket. The dollar level. Well, I don't know. I think we could get down to the low 90s. If you want a specific level, let's look at this on the weekly chart. This is the dollar index. React, don't predict. So here we are, crucial support at the lower 200 period Bollinger Band and this triple bottom that we've now we've broken down through it. We did not hold below it. So where could we get to on the dollar? And I'd actually genuinely think that the dollar is going to trade between roughly $90, 92, let's say, and about 100 and 108. I think roughly in this range that we're trading in, but we could go a little lower. And I wouldn't be surprised if, let's put a Fibonacci retracement. It's always the easiest thing to do, from the bottom to the top. And there's the 786 fib. That's the target that I've been aiming at the whole time. If you remember, I had that big megaphone drawn on this page with that 786 fib as the target. So let's leave that in there, and we could go slightly below there as well. And let's leave that in there as a long as a target for the dollar. So I think we could get into that zone and bounce out of there. And generally, I think the dollar is going to be stuck between this sort of region. I don't think we'll even get that high, actually. Sort of this sort of region most of the time the next while. I don't think we'll even get that high. So something like that. I know that's a bit weird. I haven't drawn it properly. I'm not going to bother. But something like this, and I think we could just really be trading within here. That's a very terrible drawing. Just ignore it. But you know what I mean. I could probably do it better with. Hello, Bobby. But I've got a little dog with me. I'll show you. Called Bobby. Come here, Bobby. Bobby's a rescue dog that we got. Come, Bob. That we got about a week ago, and he's the most delightful animal. There he is. And this is Bobby. And I think he's about 2 years old, and he's super, super cute. And he's got the best personality you could ever imagine. And he's loving it here in Jeffreys Bay, romping along the beach. And he likes swimming, romping in the swell and that sort of thing. So I think this is what could happen. Into that blob there, and then I think faffing around. Actually, probably more realistically, let's use this brush. That's what I was going to do. Probably more realistically, actually, is something like this. So once again, the drawing is going to be terrible. Okay, I can't do it. I don't even have a mouse. But something like that, all right? Over the next while, I don't expect any violent moves down to the bottom, like through the bottom into like get down to zero, and any dramatic moves up through the top. I don't think the dollar is going to weaken against other fiat currencies in general. I think they'll all do pretty badly against other assets, but I don't think the dollar is going to do any worse. In fact, it might even do better, as dollar-related stable coins are all the rage these days. And not so much the euro or the pound, etc., as you all know. So yeah, super interesting. All right, folks, that's it for today. And I think a big sell-off in gold or silver at some point. Jeffreys Bay. Harvey Bay. I know Harvey Bay very well, cricket man. I know Harvey Bay incredibly well. I used to live on the Sunshine Coast. Mooloolaba. Like it very much up there. Mooloolaba, yeah. I know Harvey Bay pretty well. Coffee. Coffee. I'm not going to do coffee today, Aylin. Come and join us in the private group, and we'll talk about coffee in there. Thank you very much. I appreciate that. I don't have time for it right now. I'm glad. Hello, Bobby. RK Rickster says hello to you, Bobby. There you are, Bobby. Bobby wants to say hello one more time. Let's just show Bobby off because he's such a handsome boy. All right, let's get rid of this. There's Bobby. Ah, Bobby's kicking the table. Difficult to see him, actually, isn't it? There he is. Look at that. Isn't he lovely? All right, folks. Yeah, that's Bobby. Europe needs LNG. Yes, that's a very good point, Aylin. Thank you for that, bringing that up. And I actually wanted to mention that earlier. Europe does need more LNG. Whether that will affect the natural gas price or not, I don't know. And looking at this chart, let's go back to the natural gas chart. Looking at this chart, I think it is slightly supportive of natural gas in the fact that, you know, any takeoff from the market in the US is obviously a supply side bonus, but or, you know, takeoff from, you know what I mean? Supply, any extra demand, demand side bonus, it takes, you know, supply goes into that demand. But look at all these gaps. The one thing that I cannot ignore for too much longer is the fact that we've got 1, 2 very, very large weekend roll gaps above us. And I've not seen natural gas ignore these gaps for this long, much longer than we have already. So I don't think we're going to ignore these 2 gaps for too much longer. So if we do have to drop down to 2.9, 8 or 7, those are the 3 levels roughly. You can add a 2 or an 8 or a 1 or a 3 onto those round numbers, but roughly those levels: 2.9, 2.8, 2.7. And then we've got the $3 level, of course, as well, that we're busy working around at the moment. But if we do get into any of those levels, it could be that we have a very sharp, short, and dramatic spike down now, tonight, into one of those levels. and then a reversal, an equally sharp reversal out of there. And that would look like something like this, let's say. This is the 4-hour chart, so let's try and, oh, no, I don't want to do that. And that would look something, where's the 2.7? So that would look something like this. So maybe we start off, like here, 2.8, 2.9. Maybe we gap down to 2.9, smash down to 2.7, and then race back up again, something like that. I think that's a possibility for this weekend. So don't rule that out. The other possibility, of course, is that we just do something like this. We gap up rather than down up to the top of that first gap that we have not yet closed, close that gap with a gap, and then move down, and then either carry on moving down or bounce out of there at the same time. So if we gap up, we might gap up to close that gap to the left-hand side and then move down. And that could look something like this. Just a straight gap up there and then down to 2.7, let's say, and then up, something like that. And I'm going to make that one red to differentiate it. So, or as I said, we might gap down like that and bounce off there, something like that. So 3 different possibilities. I'm sure there are more, but these are the ones that I'm looking at. So we're either going to gap to close the top gap, or we're going to gap down to revisit some of those levels that I talked about. But if we have to do that, it could be very sharp, short, and sweet, and we might be out of here sooner rather than later. Remembering we've got these 2 big gaps to close still. 1 weekend gap that we could close tonight, actually, as I said, by bouncing into it, and then another massive weekend gap prior to that. And of course, we've got a huge roll gap to the left-hand side as well. So very, very interesting. I don't know how it's going to open up, but I'm hoping that we'll, not too long from now, we'll move up into the mid-3s and then maybe up to $4. And maybe the weather spark needs to, maybe we'll get that tonight. I don't know. And of course, as you said, LNG uptake by Europe is a really important factor. And I don't think that's going to slow down. I don't think it's going to stop. Thank you for the cute dog. Yes. Yeah, futures and spot will meet at some point for sure. Absolutely. Short on natural gas. Well, we just talked about natural gas, Nicholas. I don't know. I'm not sure, mate. I've just talked about it for like half an hour. All right, folks, have a wonderful evening. I appreciate you being here on a Sunday. It's a quiet day. I'm not sure. I think some of the futures markets will be open. I think natural gas will open up tonight as usual, normal time, which is in about 5 hours time from now. But the stock markets, equities markets, everything, there'll be, depending on your broker, depending on exchanges and etc. There'll be some markets closed, some open, some slow, some quiet. Europe will be open, Forex markets are open, and Asia is open. And they will be starting business very, very shortly. So that's it. That's all for me, folks. Have a wonderful evening. Thank you for being with me on a Sunday night. And please do make sure, I'm going to do this one more time, and please do make sure to go across to a couple of things. If just humor me, if you don't mind, and go across. There's natural gas weather, by the way. This is what I read out to you earlier. Low demand, but a bit of a mixed picture. Highs of 20s and 30s, and then warming into the 40s and 50s next week. And the rest of the US will be mild, but we'll get some more weather data shortly. But you can see that big cold blob moving across now as this warmer weather sweeps in from the left-hand side from the west coast. So pushing that cooler weather out of the way. Folks, I just encourage you to go across to this channel on YouTube, the one that you're on now. Please subscribe to the channel. Take a second, it's free. And you can join the channel if you want to. And also, of course, I have an X channel. It's just called ArcisFX, and we're live on X at the moment. If you're watching on X, hello there. You can come and see what I've got to say during the day when there are no videos up. And I put a lot of stuff up all day long, almost every day. We've talked about natural gas and the futures and the COT report and everything. I think you're all set up for the week. Have a good one, and I'll speak to you pretty soon in a video tomorrow. Make sure to tune in for that too. Take care, everyone. Ciao. Barbara, the private group, there's a link below this video. You can come and join us in our private group. We have a paid private membership group, and I explain all of my trades. I put all of my trades up, all my entries, precise numbers, all my entry levels, exit levels, all the instruments I'm trading, all live, real time in a dedicated circle chat room. So it's pretty secure too. So that's all there. Okay, folks, speak to you soon. Have a good one. Bye. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.